I'm so glad you clicked on this video, because at the end of the day, if you want to invest intelligently, you need to be able to look at the bull case and the bear case so that you can really understand what the potential downside is and what the upside is. So in this video, I'm going to show you the absolute crazy bull side of things, and I'm also going to show you the absolute crazy bear side of things. And then to wrap it all up, I'm going to bring it all together and show you why I think you should be investing in Bitcoin and how you can make that as an intelligent part of a balanced portfolio. So without any further ado, let's get stuck into it. So guys, I'm just some dude on the internet. I am not a financial advisor. The information shared in this video is for educational and entertainment purposes only and should not be considered financial advice. Always do your own research and consult a qualified financial professional before making any decisions. So Warren Buffett calls it rat poison squared, and Michael Saylor says that Bitcoin's going to $13 million per coin by 2045. Well, I think this is really interesting because both have changed their minds about really big things over the years. For example, Michael Saylor once said in 2013 that Bitcoin's days are numbered. Warren Buffett said, I don't invest in tech because I don't understand it. And then he went on to buy Apple shares and become one of Apple's biggest shareholders, if not the biggest shareholder, and make many billions of dollars. So first, let's take a look at what Michael Saylor says. I've got a recent video here, and I'm just going to play you a little bit of it.
Up here. So gold right now is an 18 trillion market cap industry asset, whatever you want to call it. Bitcoin today is about 2 trillion. So that's 11%. Where should that ratio be? And then by giving us that ratio, we can back into a Bitcoin price.
Oh, look, I mean, Bitcoin's going to go to 10x gold easy. Just keep in mind, right? A public company, it's got to hold a commodity on its balance sheet because it can't hold securities.
Okay, 10x gold is a huge call, guys. 10x gold means that it has to 10x from here and then 10x again, just to put it in perspective. The other week I did a video on how many Bitcoin you need to own to retire, and I showed a little chart, and I'll just quickly show it here. It's basically the market capitalization of all asset classes. So here we've got Bitcoin at 1.9 trillion roughly, and gold at 19 trillion. So it needs to 10x to get to the market capitalization of gold, and then 10x. Michael Saylor is talking about 10xing again. So I want to go back to the video to listen to his rationale why he thinks Bitcoin can do that. It's a big call.
So you've either got a choice of a digital commodity called Bitcoin, which is 60% ARR, gold is 7%, real estate is 10%, bonds are 4%, and everything less than 15% doesn't beat the cost of capital. So
okay, so a couple of things to unpack there. ARR is the annual recurring revenue, and it usually refers to how much a business is projected to earn over 1 year. And so when he's using it in the context of Bitcoin, well, it's pretty clear that Bitcoin doesn't produce anything. So the reality is that he's saying that the total return, the annual return of Bitcoin is 60% per annum. And that's historically, that's since it was born, and it has slowed over time. And he does say that later on. I just wanted to clear up what ARR means. And so let's get back into what he says here.
So the S&P sets the hurdle. So gold fails as a treasury asset for everybody in the world. Bitcoin succeeds. I think you could, if you call Bitcoin digital gold, it's 10x gold, but I still think it undersells Bitcoin.
Okay, so he's basically saying that as a reserve asset for companies, that gold fails. Well, that might be true for some companies, but there's a lot of companies that just use cash as a reserve asset. And Warren Buffett is actually, that's exactly what he does. Or perhaps he buys bonds and other cash-like instruments, but they definitely have ARR much lower than 15%. Let's listen a bit more.
Right, because Bitcoin is digital capital. It's not just replacing gold. It's going to replace real estate, the S&P index, and any capital asset held by an institution or a wealthy family.
I think what he's trying to say here is that companies and rich people are going to essentially shift their attention to Bitcoin as a return on their investment, which is greater, far greater than anything else. I mean, if it goes beyond gold in today's dollars, and it's 19, if it goes a 10x from 19 trillion to 190 trillion, that means that it is greater than equities and greater than debt. This is all in today's dollars, so let's just leave inflation out of it for the moment, because inflation will take all these assets higher to some degree, but essentially we have to have a baseline where we can compare them. Okay, so let's have a look at what Warren Buffett's got to say.
What is it about Bitcoin that gets you guys so fired up?
Well, when you buy a farm, you look at the crop every year and what prices are, and you decide whether it was a satisfactory investment. I mean, you look to the asset itself and what it produces for you. When we buy a business, we look at what the business earns and decide how we feel about it in terms of what we paid. But we are buying something that at the end of the period, we not only have what we bought in the first place, but we have something that the asset produced. And when you buy not...
Okay, so that's pretty clear, right? Like, Warren Buffett is an investor in businesses. He doesn't even like gold. Let's be clear. I'll talk about my arguments later, but it's clear that he's the extreme opposite of Michael Saylor in terms of his thinking on what is valuable. But I think we have to listen to him because he is thought of as being one of the most successful investors ever in the history of the world. So, let's just listen a little bit more and listen to his rationale.
Non-productive assets, all you're counting on is whether the next person is going to pay you more because they're even more excited about another next person coming along. But
yeah, so you've probably heard of the greater fool theory. Well, essentially that's what he's saying there, is that the only thing holding the Bitcoin price up is the fact that somebody else is prepared to buy it for more. Well, I'll go into my arguments about why I think he's not quite correct there either. But let's take a look at what we got here in essence. So I've tried to boil this down to make it simple, and we can, when you look at it just and without getting caught up in the emotion of what Michael Saylor's going, like, I'm going to get rich. It's awesome, Bitcoin, everything he says kind of makes sense and it's all exciting, but the reality I think is a little bit more balanced. And here on the screen I've got, on the left-hand side is Michael Saylor. Bitcoin is 10x gold easy and $13 million a coin by 2045. On the other side, we've got Warren Buffett saying it's a non-productive asset, and the greater fool theory applies it. And so I think as we go through this, I just want for you to make up your own mind and to really see what's going on so that you can think about it in terms of a balanced, diversified portfolio. And I do think it does have its place, but I do think there's potential for volatility, obviously, potential for great gains, and let's continue on. So one of the most prolific YouTubers is Plan B. I don't know if you've seen his work before, but he came up with the idea of stock to flow, and a lot of people give him a lot of credit for this, and it has been, reasonably accurate over time because he has been around for quite a long while, but I feel like it's oversimplified. It basically takes 10x jumps at each of these, but it's really interesting to hear what he has to say in his latest video. So let me show you that, because he starts talking about where it's going in this cycle in the next year or so.
If you take a margin of, say, 2 times the model value. 500, 2 times is 1 million, and you divide it by 2, it's 250,000. In that area, that's where I expect the average of this 4-year period to end. And mind you, that is a lot higher than most other models in the space.
So what he's saying here is that the average is going to be 250,000 this cycle. So you can see with each step up, this is the model price here, and this is the actual price of Bitcoin, which is represented by these dots showing the RSI, which is the relative strength index. And it's pretty interesting because you'll notice that as it gets into the red, the relative strength index is getting hotter. That tends to be closer to a top. And so we're not there yet. And that's, you know, if you have a look based on previous cycles, that's a fairly good indicator that we've got, you know, potentially a fair way to go, let's say. And based on his chart, this is, you know, 100,000, 200,000, 300, 400. This is 500,000 here. And he's talking 250,000 as the average, which is what he said in that video that I just showed you. What I prefer though is the power law model. I think graphically it is a lot clearer to see where things are going in terms of these models. And according to Crypto Slate, the Bitcoin could peak around 210,000 in January 2026, followed by a decline to 60,000. If you look at the chart here, I think that that's certainly possible. If you notice in the last peak cycle, it's a little bit below this purple line. And the purple line's obviously resistance, and we've got support here. So if we extrapolate this line up here and we say, okay, maybe it only gets halfway towards support, I think it's reasonable to say that it gets to 500,000, which is exactly where the stock to flow model is saying it can get to as well. And then can it get to 60? Well, interestingly enough, there's your 100,000, and coming back to this red line would be 100,000, but it could come back to this line a lot sooner than 2 years. In fact, that's almost certain based on the halving cycle. So yeah, we're probably looking at, well, 70,000, which is very similar to Plan B's stock to flow as well. But let's put all this together, guys. What this means for you, I think, in terms of a diversified, balanced portfolio is really interesting, because Bitcoin is, due to its limited supply, potentially an excellent hedge for inflation. So inflation seems like it's out of control at the moment, and I feel like it's going to go higher, or it certainly could. And it seems like governments have no propensity to actually take their medicine and allow our economy to have a recession. They're just going to keep printing money, and that, as we have seen, leads to inflation. So I feel like Bitcoin is an excellent hedge against inflation and currency debasement. It's also a decentralized asset outside the traditional systems. And the beautiful thing about this, of course, is that it gives you financial sovereignty. It gives you power when you wouldn't necessarily have had power. And this may not be such an issue if you're, in a Western country like the US, but if you're like many people around the world where currency debasement is a massive thing, and you don't trust necessarily your government, then financial sovereignty can be a really big thing. Portfolio diversification is obviously a huge element. Historically, Bitcoin has had a relatively low correlation with stocks and bonds and other investments. And so as a diversifier, it seems to hold its ground. I think that's going to change as time goes on because it has been more of a speculative asset, but over time it will become more of an inflation hedge due to its limited supply. But time will tell. Innovation and adoption, this is where it gets really interesting. I think one of the main things about Bitcoin is that it has a potential to become far more than digital gold. I believe that that's the base case, but it could actually become our currency, or it could become a solution to many currencies around the world. And Ecuador is a good example of that when they adopted it as one of their currencies. But I've got over here a chart of the Lightning Network, and this shows the number of network nodes, which is just an indicator of how successful and how much the Lightning Network is being used. And it shows that the Lightning Network has pretty much flattened off, and if anything's actually gone backwards. So unfortunately, what I thought was going to be one of the biggest reasons to see Bitcoin pump in the future looks a little bit iffy, but we can't rule out that there's going to be more innovation in the future. And, you know, we're just at the start here, guys. I feel like in another 5-10 years, who knows? Like, yeah, hyper-Bitcoinization potential is also a really good reason to have Bitcoin. A lot of people think that they need a lot of Bitcoin to get rich, and that might be true actually, but the reality is I think even just a very small amount of Bitcoin can be a really good idea, because if we run into a situation where Bitcoin starts to become the reserve currency of the world, and that's what hyper-Bitcoinization basically means, then it's not just going up, it's going to probably go up more than 10x of gold, which Michael Saylor talks about. It'll actually go beyond that. So yeah, I think just holding even a small amount of Bitcoin can be a really good idea. So what could this mean for you? Well, one of the most amazing things about Bitcoin, in terms of empowering freedom, I can't think of a better way to feel like you're in control of your money when you have this decentralized asset that's, you know, it's yours and it can't be touched by anyone. And it means that you can go anywhere in the world and have this money with potentially just a seed phrase in your head. You don't have to actually carry anything. So there's just no way potentially that a government can get at it. So we talked a bit about diversification, and it's just not very well correlated to stocks, bonds, gold, or real estate. And it just gives you that ability to diversify your portfolio. I love it because if things really get messy and the proverbial hits the fan and we end up in a situation where there's hyperinflation, then Bitcoin will stand the test of time, I believe. 21 million Bitcoins, fixed supply, means that for as long as there are issues with fiat currencies, Bitcoin is going to do well, I think. In a video I did a couple of weeks ago about how many Bitcoins you need to retire, I showed even with a pretty pessimistic, pretty bearish case, which I think is important for thinking about retirement, you can get a compound annual growth rate of 26% over 10 years. And that's based on a $1 million Bitcoin in 10 years. That is a phenomenal return if you consider the S&P is 10%. And let's consider that it might take another 10 years, 20 years to become $1 million. It would have increased in value by 12.25%. And that is still greater than the S&P. It doesn't account for the value it brings to your portfolio in terms of diversification. And if Bitcoin does indeed start to become part of the financial system, as I showed before, that all bets are off. These numbers are way too conservative. And I know you Bitcoiners are going to be all over me like a rash in the comments, and that's okay. I love the bull case as well, but I think as an investor, we need to think about all of the aspects of our portfolios. I think we need to be diversified and balanced with Bitcoin as part of the picture. And don't worry, Bitcoiners, if you think that that's not going to be enough to keep driving the big price of Bitcoin, that's absolutely not the case. If everybody started to buy Bitcoin, just even a small percentage of it, we would get to potentially the market cap of gold very quickly. The other main reason why I think everybody should have a little bit of Bitcoin is it's potentially generational wealth. It used to be about property, and if you had property now that your parents or grandparents owned, then you're potentially rich. And I think Bitcoin is going to become potentially a generational wealth opportunity. So guys, I really hope you found that helpful. Thanks for all your likes and subscribes. Love your comments. Look forward to seeing you below. Talk to you again soon. Cheers.